what's happened to energy prices since the ceasefire has been announced. So more specifically, how has Qatar's LNG been impacted by all of this? So it's not just the disruption in the Middle East in regards to LNG, what is happening in Australia? Has the latest heatwave had an impact on energy prices throughout June? And how are European storage levels looking as a result of this heatwave? So going into July, geopolitics is going to be a key driver again. So what is the one thing customers should be keeping an eye on?
It's going to be really important for businesses to keep an eye on.
So hi Emma, thank you for taking the time to join me today to discuss the latest events shaping the UK energy market. Since we last spoke a month ago, there have been some significant developments when it comes to energy drivers, most notably the 60-day ceasefire between the US and Iran, and of course the reopening of the Strait of Hormuz. Now many customers off the back of this news feel that prices may drop, however, that's not necessarily the case. Please could you explain as to why?
Yes, so as you rightly say, on the 14th of June, there was a ceasefire agreed between the US and Iran that's to last for 60 days. And during that period, the Strait of Hormuz is going to reopen to commercial shipping. So we've seen an increase in terms of the amount of oil being exported from the region, but we've not seen quite the same increase in terms of LNG being exported out of the region. And also, in addition to that, the agreement is interim, which I think is important to note. So it's due to last for 60 days, but there's still some caution in markets that we may see a return to active conflict.
And that is interesting because when you hear that oil is starting to flow again, you naturally assume that gas will follow suit. Could you give some detail as to why that's not necessarily the case?
Yeah, so the process for exporting LNG is quite a lot more complex than the process for exporting oil. So what that means is that it can take a number of weeks for the facilities that liquefy gas to export it to restart operations. So they need quite a lot of confidence that once they've restarted, they are actually going to be able to export what they've produced. So it can take anywhere from sort of 4 to 6 weeks for these facilities to turn back online. So they're waiting for some guarantees essentially that we're not going to see this return to active conflict and they can safely restart and they'll be able to then export at the end of that process.
Okay, which makes sense. So my next question, I guess, is focusing on the global LNG market as a whole. And I think it's appropriate we start with Qatar. What's the latest in regards to that facility or area?
Yeah, so we have seen an increase in terms of the LNG that is being exported by Qatar, but they're still operating at about 10% of capacity in comparison to pre-conflict levels. As I say, once they have some guarantee or a bit more confidence in the Strait of Hormuz remaining open to shipping and they restart those processes, they're saying that they plan to return to 50% of capacity within a month of safe transit through the Strait of Hormuz and up to about 80% of capacity within 2 months.
Okay, so it does look promising for a return to not quite the levels we've seen before because of the damage that's been sustained. However, a significant improvement on what we're seeing to date. I guess to turn the conversation back to what matters most for customers, and that's ultimately the price. What impact are you seeing?
Yeah, so prices do remain elevated. They're about 30% higher than front season gas prices were pre-conflict, so back in February. But we have seen about 35% decline since the peak prices that we saw back in March.
Okay, and what about the longer term? You know, if I'm a business owner and I'm thinking about planning ahead for the next few years, what is the market telling us?
Yes, so as I mentioned, those nearer dated contracts do remain elevated compared to pre-conflict levels, but what you see when you look further out on the curve, so looking as far ahead as even the Winter 28 contract, you've seen prices lower than the front season. So as an example, the price for Winter 28 gas is about 30% lower than the price for Winter 26.
Okay, so still value to be secured through backwardation, and obviously what's key to doing that is making sure you're on the correct product to enable you to do that, such as our multi-purchase offering. So as you know, it's not enough what's already happening in the Middle East with this conflict. We're also seeing disruption on the other side of the world in relation to LNG. Can you let me know a bit more detail around what's happening with Australia and their LNG facility?
Yeah, so there's been some industrial action or some strikes at LNG facilities in Australia. In particular, the HT's facility in Northern Australia has had a strike, and we did see a decrease in the output from Australian LNG as a result of that. However, it was resolved mid-month, and we have actually seen a return to normal production since then.
So let's move on to our favourite, I guess, British topic, which of course is the weather. We have been in the midst of a heat wave, so I'm assuming that has had some impact when it comes to energy prices.
Yeah, absolutely. So as you can imagine, when we get warm weather in the UK, but also across Europe, it really drives that cooling demand, especially for things like air conditioning in continental Europe. So that increase in demand quite often pushes prices up. And one thing to note with the recent heat wave is that at the same time we saw quite low wind generation, so less renewable generation on the system meant we were relying even more on gas-fired generation to meet the rising demand from that cooling.
And again, the golden question that customers want to hear, what impact has that had on prices?
Yeah, so it's had an impact on prices sort of across the curve, really. So as you can imagine, it has impacted the day ahead price. And we've actually seen hourly day ahead prices up as high as £420 a megawatt hour off the back of, like I say, that rising demand and the lack of renewable generation to meet that demand that's been on the system. But it's also impacted prices further out as well because of the sort of secondary impact that it has on fundamentals. So as I say, we've had really warm temperatures and we've been relying quite heavily on gas to meet that demand. And because we're relying on gas to meet demand, there's less surplus gas to then inject into storage. And as a result of that, storage isn't where we would like it to be this time of year, which pushes up the prices on those further dated contracts as well.
Now you mentioned storage, and often we talk about European storage as a key indicator. Of course, the weather's been lovely over here, maybe a bit too hot, but that's also been consistent in Europe. So what impact are we then seeing on the European storage level?
Yes, European storage levels are currently about 49%, and that's about 10% behind where we were this time last year. And we still need to get to that 80% obligatory target by the end of the year. So we need to see a change in conditions, essentially, either some lower temperatures and as a result more surplus gas to inject into storage, or higher renewables and therefore a bit more gas to inject into storage to really increase that injection rate to make sure we're on target by the end of the year.
Now, of course, we're over halfway through the year now, and the more it's progressing, I think that storage, indicator is a key one that customers should keep an eye on. Do you agree with that sentiment, or are other indicators they should be focusing on more?
Yeah, definitely. Of course, there's the geopolitical picture, which is at the forefront of everyone's mind, but keeping an eye on the fundamentals behind all of that is really important as well. So what's the weather doing? How is that impacting the amount of gas that we have on storage? And then other things like the interconnectors, etc., that we have with the European countries, keeping a close eye on that supply-demand balance as well.
Thanks, Emma. Really useful insight. And again, it's a clear indicator that our customers should be keeping an eye on moving forwards. So finally, moving on to the outlook for July and going forward, what would be your advice for the one thing that customers should be keeping an eye on?
Yeah, the top thing, probably unsurprisingly, is going to be geopolitics and keeping an eye on what's going on with the negotiations between the US and Iran. There's obviously this 60-day interim deal that is now in place with flows coming back through the Strait of Hormuz, which is definitely a positive step in the right direction. But there's definitely some points of contention that still need to be worked out before we can see that longer-lasting deal. So first of all, Iran's uranium enrichment program, and second of all, it's the Israeli forces withdrawing from Lebanon.
So quite a lot to unpack there. But I guess my final question to you is, what's the likely impact of all that uncertainty when it comes to energy prices?
Yeah, so I think prices are likely to remain elevated in comparison to pre-conflict levels until we get some form of guarantee or an agreed peace deal at the end of this, which means Qatar can finally start to export LNG again. Of course, if we do see a breakdown of negotiations and we start to see a return to active conflict, then prices could push higher and back up to recent peaks, even if we start to see more damage to energy infrastructure. And equally, if we do see that longer lasting peace deal agreed and some confidence return to markets that actually the war is over, then we could see prices fall back to the prices we were seeing in February time.
Well, fingers crossed. It's been the first positive month, I'd say, in 2026, and hopefully that sentiment continues and we start to see a positive impact when it comes to energy prices. Now, we've covered quite a lot today. As always, LNG, including Australia as well, energy prices, storage levels, geopolitics. So I just want to say thank you, Emma, for helping make what is a very complex market quite easy to understand. I look forward to us both catching up next month. And again, where hopefully we have some positive news to share with our customers. Thank you.